How much does this story play into how you view the results coming out of Disney and what they should be saying about their future prospects and forecast?
Yeah, I don't think it's the most meaningful piece of the puzzle. I think the conversations probably 2 years ago that Disney was having were really trying to get the leagues to take equity stakes to sort of cement ESPN across a wide array of leagues to make ESPN sort of the de facto streaming destination for sports. That didn't happen. I think this is sort of a backup plan on the margin. It's a good thing for Disney, a good thing for the leagues, but I don't think it's thesis changing.
Now, if it's not thesis changing, what will be thesis changing for you as you get ready for these reports coming up later on this morning?
Well, I think the most important thing is the buy side is expecting management to raise their guidance from 5.75 to $6 of earnings. So that's sort of a soft expectation today. If they get that, I think you'll see the shares go up. If you don't see a raise in the guys, you'll probably see a little bit of pressure in the shares. The second most important thing is the experience segment. It makes up the majority of Disney's profits. Investors are a little bit nervous about the launch of Epic Universe, a little bit nervous about the macro. So we can't see any cracks in theme parks or what they call experiences.
The Epic Universe, of course, is owned by our current parent company, Comcast and NBC Universal.
Indeed.
So I just want to say that out there for disclosure purposes. From a competitive dynamic, it's also very much, like you said, streaming is a part of that program as well. There was a huge focus on the streaming metrics, the user growth, subscriber growth in those particular units. Now that Disney has pretty much seized control of all of its streaming channels, how exactly do you view Disney's prospects in streaming versus, say, some of the other big competitors out there, namely Netflix and others, who are getting into, by the way, live events?
Yeah, I mean, I would say Disney is the only legacy media company that has a fighting chance to become relevant. I call it a pay TV substitute. Most of the other streaming apps that are out there I describe them as HBO in a digital world, meaning they have very high churn, very low engagement. The consumer cost per minute of engagement is actually quite high. Disney has a chance, and I think a key part of that is going to be to essentially unwind what Disney did when they launched streaming, which was have 3 separate apps. ESPN Plus, Hulu, and Disney Plus, and begin to sort of synthesize all of those apps to make it one app to ultimately drive engagement and get churn down. So that's the journey I think we're on.
All right, Jason, really quickly before you go, what is your favorite stock in your coverage universe?
I didn't get disclosures for all my stocks, so sorry, I can't answer that.
All right, fair enough.
I apologize.
No worries.